Hey, good morning, guys. This is my morning brief video. And so basically, there's a big change in character versus the jobs last week. Last week, they had this idea of a Fed pivot. So they were trying to rally the markets ahead of the jobs number in that scenario. Well, we're doing the opposite going into CPI here. They are actually selling the market into the CPI number the way they should have done in the first place. And so, what we got going on here, first of all, what's really important today, I think we are going at some point today be over 4% here on the 10-year yield on our bonds. So, be aware of that. Double top, if not worse. So, be aware of that scenario. Remember back here in June, you know, uh, we came in, we just blew right out of that double top, back in June. So you have to keep that in the back of your mind that we could be blowing through this 4% today, and I think we're going to 5%. So, uh, that's quite a ways, guys. 5%'s up here. So, uh, just keep that in mind. That is a blow up scenario in the markets if something were to happen and these yields just take off to the moon. So be aware. After Jamie Dimon yesterday, it's got a lot of investors spooked. This scenario could definitely happen. So be aware of that possible scenario of a breakout to yearly highs here on the 10-year yield. Okay, guys. Another thing I'm looking at here, the dollar, guys. So, just turn this off real quick. So, similar situation. We got the dollar here. Uh, our signal lines down here on our RSI. Let me turn this off 1 second here. We are just about to have a bullish cross on our signal line. You see what happens there? So you get that bullish cross right, let's see here. Right here, explosion, bullish cross right here, explosion, and we might be possibly getting a bullish cross right here to where we might actually be seeing new yearly highs setting up here in the before the week's out or next week here on the dollar. So another thing, so we're at 20-year highs on the dollar index. I think we're going to 22-year highs. So that goes in line with what I'm thinking. If you go out here on a quarterly basis, or monthly max. Let me find if I can find monthly max. Now I have to go from my other chart. I'm sorry, can't do it this way. I forgot. They don't have the data. I have to go think or swim. But you have to go out 22 years, and there is some major resistance around the 120, 122 area to the upside on the Dixie. So keep that in mind. Also, both of these scenarios suggest bearishness in today's market. So other things I'm looking at today, setting up, actually, yes. Um, yeah, global markets are all selling off right here. So basically right here is a critical support area right here. Okay. Very, very critical support area. So what I've got going on here, this looks like the head of a head and shoulders pattern. Okay. And this potentially could be well, could be entering a shoulder area. This would be your shoulder area. Okay. So just keep that in mind here. Uh, or this could be down here, the bottom of your head, down at this area. We could call this the bottom of your head. So to complete the head of the head and shoulders pattern, that puts us down into the 3400 area. So be aware of that. There's a lot of reasons to think that we're going to get that 3400 area. Okay. And, this prior breakout right here, that would be a completion of this head into that 3400. So just definitely keep that on watch here. So what we're doing right here, we're into some SAR uh, 4-hour and daily support. We're still fighting, chopping through this right here. So be aware of that. There's nothing to say that we can't go back up here, okay? But it does seem like we are in a wave 5 scenario, and to make this count valid, you do have to take out the 3, okay? And we put a double bottom in yesterday, and I told the guys I thought we'd be at 3600 again, the pre-markets here, and I think we have already done that. Um, so Let me double check here on the 1 hour here. Have we done that yet? Yeah, we're 3606. Yeah, 3601. 3601 so far. So these were after hours lows that have never been looked back at. Okay. And I was saying last week after we put those in, I don't think the low could be impossibly in until we came down here, tested this, and buyers came in and saved it. And so far, it looks like we might be opening in that range possibly here. And we'll have to see if buyers show up to save that area. Okay. Um, so definitely keep that in mind. Obviously, I think we're going to 3,400 by midterms, but there is reason to think we do have some support in this areas. 3550 is critical. So I have SAR support in this area, and I also have a trend line support. So that's why I think, as far as today's session goes, I think there's a really good chance we're going to be down to 3550 at some point in today's session. Okay, so be aware of that. That is my primary thesis. Okay, we are below our CPR, and I do want to point also, because of the low volumes yesterday, CPR is just basically a flat line. Okay, so anything can happen here in regards to our CPR, but it does look like everything's going to be closing on the bearish side of their CPRs. Okay, another thing that I'm looking at this morning, with Jamie Dimon coming out talking about global recessions and all that stuff, and the lockdowns in China, going on and everything. Crude is catching a. Let me go CL first. Crude is under pressure this morning. You're down 40 cents here on crude. Initially, we came up right into my resistance. We seem to be selling down against it. We're below our CPRs. Good chance that we could actually migrate all the way back down here to the 88.40 for a back test. Okay. Remember, crude is up significantly on the year, and if everything's coming down, the one that's been doing the best is likely to take a haircut. So I am looking for crude XLE to actually be coming down today. Probably coming down into our support areas, 77.50. So definitely keep this one on watch here. A possible retrace in our crude oil. Crude could be actually, or our energy space could actually be under some pressure today with the broad pressure in the global markets. Okay, so this is one of my favorite areas. I think today could be a strong short in our energy. Okay. Other things I'm looking at here now. I want to go over here on my Itchy, and yeah, this is another thing, another way of looking at it here. See how we're opening well below our clouds, and uh, this is a first opening print below our CPR, below our clouds. I love that scenario for a continuation short scenario. So that's something I always look for. Okay, Apple. Okay, Apple. They're trying to save it. What can I say about Apple? They're trying to save it here. Let's go down here. Maximize sell. And yeah, okay. So we do have some SAR support down here on Apple. Tech's really taking on the chin here. So Apple's going to be opening near yesterday's lows today into a support area. So if we take out yesterday's lows, this thing could actually get a pretty good quick move today down to the 136. Well, we're the 136.80 area. We could possibly see a pretty quick, swift move down to 136.80. We do have a uh, uh, fib spiral. Okay, if that's the case, if we start, if the markets start breaking down here, we'd be breaking outside of our spiral here on Apple. So be aware of that. When those moves can be really dramatic once you start breaking out of those spirals. Okay. Other things I'm looking at here, and I do really want to show you back over here on the Ichimoku. Like I said, these are really bearish clouds going into today, but you have to be really careful because we have the CPR is so narrow that they can just flip this on the dime in just a matter of moments. So be aware of that scenario in today's session. But we should be opening down here below our CPR today here on Apple, unless something changes before the open. Other things I'm looking at here today. I always look at my uh, Monsters of Tech. Okay, Amazon. Okay, Amazon was already very weak coming into today's session, and now we're even weaker. So I kind of like Amazon to the downside. So let's keep a close eye on that. We're probably going to be coming down here, retesting these lows, the 111.60 area, if not breaking. So keep a close eye on that in your trading today. I'm going to go on a daily time frame here. Let's see if we can look at those SARs on that real quick. And so, yeah, see, this does not seem supported to me. We're back inside of our, central uh, fib spiral. So this is the max pain area, in my opinion. So in my opinion, if we get some sell side action, it could be a very quick swoosh down into that 102 area. So keep that one definitely on watch. And I was also looking at Google today. Google looks like a breakdown pattern. So it looks like we are rejecting. So we got this gap right here. It does look like we are actually rejecting that, in my opinion. Okay. So, if we do that, this could be a really fast. See how you're on the way up, the SARs were so spread out. This is not a really supported area. So if we start taking uh, these prior lows out, this thing can go pretty quick here. And it looks like 86.50. So I like this one, if we get a strong sell-off, I really like Google to the downside because it does not seem to be supported in this price area. You can always, that's what I love about the SARs. You can identify areas that are supported and which are not. And Google does not seem to be supported at these price points. Okay. Microsoft, check that out real quick. Microsoft. See, you see what's going on here. You see how everything, you know, see Microsoft's fairly supported here, so it's hard to get paid on something like that when the SARs are so tight. Okay, just be aware of that scenario. But this thing does look like it's in free fall, coming down in here to test the 213.50. So be aware of that. This is a much harder trade. Okay, so in my opinion, um, so you have to actually get below the 223.80. So it looks like it might be hard to get down to that area, but then it would speed up to the downside if it starts breaking that area to 220, 223.80. So until that, it just looks like a slower trade to me. And then any others I want to Tesla. Tesla's into support. Okay, we are into a supporting arc right here. So be aware of that. So in my opinion, it's a much more difficult trade here. The easy money was coming down into this area, so uh, so be aware of that. It's a lot more difficult trade to the south, to the downside on that one. So I'm not actually trading that one. My favorite is still Google, so be aware of that. And then any others I want to talk about. So energy and Google, those are the two things that I'm really focused in on today, and in Amazon possibly. And then we have our financials too, like Goldman Sachs. Um, you see how we rocket shipped right here on our SARS, okay, and it was a rocket ship here as well. So both of these suggest we're not really supported too well, so that takes us down to the 272 area. So I'm really stocking this one. We do have our earnings, bank earnings starting Friday. So just definitely keep this one on watch. This is if we were to break down in these markets, I really like this thing to be retesting these prior lows, if not breaking down to the 272 area. Okay, so that's one of my, on the financial front, that's one I'm really watching here. Okay, so obviously you can tell I'm bearish. So I'm sorry guys. I'm bearish until the markets tell me otherwise. Okay, and you can even look on here on your cloud, your 1 hour clouds here. See, we're going to be opening most definitely, down here below our momentum and our standard Ichimoku on a 1 hour. And that's what I primarily use. I want to see if we're opening, looking more bullish or bearish first if you're itchy. And pretty much across the board, all the charts are looking bearish, continued bearish, and so be aware of that. Going into today's session. So what about IWM? Let's check that out real quick. That's another one, really tight, but the itchies are telling us that we're probably going to break lower. So it's really a difficult day knowing that your CPRs are so tight. Yeah, like I said, once we start crossing over that, it can actually trigger a massive short squeeze in this scenario. So that you got to be very cognizant of that scenario in your trading, and know that the moment you start breaking above this stuff, you need to have your stops in place and ready to run, so be aware of that scenario in today's trading. And we do know that we have some massive divergences in this market. So, uh, be aware of that scenario. It wouldn't take much to get a run on a massive short squeeze. So definitely keep that on watch. We're coming into a very strange situation. We are typically, because of the holiday, Columbus Day holiday. It's creating a situation we haven't really been seeing, for quite some time now. So, that's, again, which could actually trigger a relief rally. So you have to be cognizant of that possibility. Okay. Thanks for watching, guys. Please like my video, leave comments below, and I appreciate you guys taking your time out to watch my video.